Has the crash started in 2022? Let's find out in this video.
I'm so in love with you.
I have been quiet on this channel. I told you guys at the beginning of this year, the Fed had already told us what to do in terms of investment in 2022. What did the Fed tell us? Doing nothing, right? I already told you guys, the Fed had decided that it would raise interest rate at least 3 times in 2022. And it's not determined yet, maybe more. Investment market doesn't like uncertainties. Facing this tightening monetary policy, as an investor, we should be very cautious in terms of investment. So I thought if there's nothing to do in the investment market, let me do something else. So during the Christmas and the New Year's break, I was preparing for the Amazon AWS certificate exam, and I passed it, by the way. Today, when I look at the stock market, oh my God, that's not good, guys. That's obviously a bloodshed. January is not over yet. We are about 20 days after the new year. And the Nasdaq has already dropped 10%. That's a stock market correction territory. Can you believe that? That's crazy. This is the power of the Federal Reserve. Never ever play against the Federal Reserve, guys. What should I do if I insist on investing in the new year? I don't care about the Federal Reserve. I'm sure I want to invest. What should I do? First, I want you to calm down a little bit, because yes, you could have a lot of money, but compared to the Federal Reserve monetary policy, your money is like a little ship in the ocean. When tsunamis comes, the little ship just cannot resist to the power of tsunami. And the Federal Reserve policies are like tsunamis to me. But if you really want to invest, here are some strategies I would carry on. For housing investments, I would not invest in the properties, in the houses, in the physical buildings. Instead, I'm thinking about some alternative investment vehicles. For example, I would invest in REITs, ITB ETF. The ITB ETF is a basket of builders' stocks. I'm thinking if I invest in stock vehicles, it's easier for me to get out of the market if the market is not doing well. But if you invest in the houses, in the properties, you lock yourself with a 30-year mortgage. If you cannot rent out the houses, it could be very challenging to your cash flow. I would also think about some bank stocks, because when the interest rate increases, the mortgage rate will increase, which means the bank's profit and revenues will be better. So this is what I would do if I'm thinking about housing investment. I will think about these alternative investment vehicles. In terms of stock investments, I really want to take a gap year in 2022. I wouldn't pick up some particular stocks. But if you insist on investing in stocks, maybe dollar cost averaging is a better strategy in 2022. If the housing market has started cracking, what if I want to buy a house for myself and my family? Should I buy or rent? This has been a 1,000-year debate between buying and renting. I think you need to consider a lot of factors. The first and foremost factor I would think about is if I will live in that house for a very long time. How very long? At least 5 years. The longer you live in the house, the more equity you can build. You can also resist some market uncertainties. For example, if you just bought a house last year, and this year the housing market starts cracking already, right? if you sell your house this year, you will definitely incur a lot of loss, monetary loss, effort loss, and so on. But if you live in that house for at least 5 to 10 years, you can average the uncertainty effect. You can resist more market uncertainties. So if you are sure you will live in that house for a long time, just go ahead and buy it. You don't need to compare if you will pay more between mortgage payment and rent every month. Because if you buy a house and live in the house for a long time, you can build equity. But if you just pay rent, when you move out, you cannot get the money back. This is the difference. So the first and foremost factor is if you will live in that house for a long time. If you say my rent is cheaper, or I prefer to rent, I like the housing flexibility by renting, then keep renting, but don't let your money slip in the bank. Invest the money you saved into alternative housing investment vehicles like REITs, builder ETF, bank stocks, or index funds. By the way, I really like index funds. I think no matter you invest in stock or you want to grow your savings, index funds is probably one of the best investment strategy. Let's say your rent is $1,000. If you bought a house, your mortgage payment would be $1,500 every month. But if you insist on renting, basically you saved $500 every month, right? You invest this $500 into index funds, REITs, builder ETF, bank stocks. In the future, if you need to buy a house, your money you invest in the stock market and the alternative housing market can contribute to your down payment. This would be a smarter strategy if you rent. As I told you guys before, cash is king in 2022. We have seen the inflation is out of control in the US. I really wish the Federal Reserve monetary policy can control inflations. You can see the food price, housing price, clothes price are all up. I wish the Federal Reserve can control inflations, but we are not sure about the future. So you have to get some cash ready in case the prices of the basic products increased significantly. You need to pay more money for the extreme shortage, right? So get cash ready in 2022 is extremely important.